What a way to begin the morning. Like the minister said, choose France, bet on France. In a word, to bring a word from the crypto space here, bullish. We're bullish on France, we're bullish on Signal Week, we're bullish on Paris. Now, not much can happen without regulation and without clarity, which is why our next talk is going to dive into MiCA and the consequences of it. You'll hear from Peter Kerstens and Haider Rafique from OKX.
Smells like gold.
Let me tell you a little story.
I'm tired of this.
Okay, where's the gold?
Enough!
No gold?
Yeah!
You're the only one who's not having fun.
It's a fair trade. Better be good.
Sit here. Hello, everyone. Good morning. Thank you, first off, and it's great to be here in Paris. At OKX, we operate in a number of regulated markets, and Europe stands out as having delivered the most comprehensive crypto regime at scale with MiCA. The focus is now the framework and how it performs in practice and how it evolves. So today is about bringing the real-world implementation experience with the next phase of policy design. And Peter, I'm so happy that you join us. I'm going to give you a minute to introduce yourself to the audience.
Well, thank you, Haider, for inviting me here on stage at the beginning of Paris Blockchain Week. I've been working in crypto policy or digital assets policy for 8 years now. And it's about 8 years ago that we started with the design of MiCA. It was indeed the first framework. It's the most comprehensive framework. And it's been the inspiration for regulatory frameworks around the world, where what was designed in Brussels is being emulated across the world. And we have many jurisdictions now are putting frameworks in place. But as our own framework is starting off, and the aim of this framework was to bring clarity into the market, to bring certainty, and to onshore crypto activity onto European markets. We saw that people were interested in crypto, but they were trading offshore. We said, if you want to trade crypto, do so in the regulatory sunlight in Europe, if you're European. That's what we wanted to do, create legal certainty. Now the framework is in place. We have both on the issuance and the service provider side, over 180 licensed entities operating. There will be more, but it's time now, or the time is to start taking stock as, is MiCA delivering as it was designed? And what's next? Because this framework was designed 8 years ago. The markets have moved on, the markets have matured. They're not yet fully mature, there will be other developments, but we really have to say, and people have to recognize that MiCA is not the end of the story, it's the beginning of the story. And that's why I'm so happy to be here talking about this with you.
Lovely. And for folks who saw the trailer and you found it exciting, I really encourage you to go on YouTube or any streaming channels and look up the film. It's called The Mile West by OKX. And the premise behind that film is we feel that our industry deserves to be called the Mile West, not the Wild Wild West. And I think we'll focus this session on how collaboratively we can all create that environment for ourselves. So I'll start with the first question, Peter. MiCA in practice. Actually, before we even go into MiCA in practice, I want to look at this world map over there on our left side. And if you reflect back 5 years ago, I would argue that all the markets highlighted in light colors did not exist back then. And those represent the markets that have clear regulatory framework today. Can you imagine what this map would look like in 5 years? Because our view is, Peter, that in 5 years, maybe 7 years, you'll see very few markets, if any, that will have self-regulated frameworks or absence of one. So that's the world we're heading towards. So when you look at MiCA and MiCA in practice, we're now in the early phase of MiCA implementation. From the Commission's perspective, what are the most important and early insights that you can share? Let's start the conversation there.
Well, first insight is that MiCA is working. We see firms being licensed across the EU. It's not that they all go to one member state, so we see licenses being given out across the EU. Usually a sign for success for the Commission when we do regulation policies, do we get many complaints? We do not. We do not get many complaints, which is a sign that it is working very well. Does that mean that there are no questions, are no debates? Is there things that cannot be improved? No. But there is no major problem. So people who say, we want a MiCA too, that is because they want more of this, not because they think MiCA is broken and therefore needs to be fixed urgently. And that's a good sign that people say, yes, this was the right approach to take to bring order into this market, to turn the Wild West into a mild West. Because it was, when we started off, crypto was a Wild West environment, very exciting. You could become very rich or lose it all easily. And it's now much, much more mature. But we need to go further because it's not only going to be crypto markets, we're going to see digital assets markets. Any asset can be tokenized. Any asset can be put on a blockchain and traded. And that is why we need to constantly review. But the first insights are that MiCA is delivering. And of course, the press likes to talk about drama here or debate there and so on. But I do not think that this is material in any way.
Yeah. So 30 NCAs. I mean, gosh, I can't even imagine how the consensus works. But if people have perception that Europe can be slow, well, with MiCA, you being the architect of MiCA, you've proven that wrong. Because you look at the United States, there's legislation finally coming out, one with Genius Act, you know, the Anticipated Clarity Act, but it feels that Europe's figured this out faster than the Americans. Can you tell me a little bit about that?
Well, we started off thinking about it in 2018. At the time, there was very little momentum for pro-crypto regulation. People said, that's a waste of time, don't do it. But we said, no, there's a lot of opportunity in here, and we have to promote and enable this. For our own economy, for our own investors. And then when the stablecoin debate got launched with Libra, that really created a bit of political panic that was a catalyst for us to present MiCA. We were in a way lucky then, is that the crypto ecosystem itself was not that much focused on policy and politics. So we had very little public affairs and lobbying. And the financial institutions, the traditional financial institutions, were completely uninterested in this. They said, this is a sideshow, no one cares about this stuff. So we got to do MiCA in relative quiet waters. I'm currently looking at the debate in the US. And what I see is that it's pitting the crypto industry against the banks. And they're canceling each other out. And that's why the debate is not progressing. And it's pointless for them to cancel each other out. They should work together and bring this further. So it was difficult to develop MiCA because many member states and members of the European Parliament had no real idea what this market was about. They knew nothing about it. Or if they knew something or they thought they knew something about it, they thought that, oh, crypto is a money laundering conspiracy and that's it. So we had to do a fair amount of education as to why there was value into this, but there was no strong polarized positioning, which allowed us to take it through relatively quickly. Now, it's all relative in life. It still took us 3 years of preparation and negotiations, and many of my days at the time looked like Groundhog Day. Every day was the same. I said, oh, more of this. When are we finally going to agree this? But we got there, and then we did the implementation. So it's now a number of years later, and it works well.
Well, you're absolutely right. I think you guys got it done when this wasn't a politicized topic. And I worry that in the US, the politics might kill any prospects of us seeing common sense legislation. But anyway, I'm going to move on to the second section around supervisory convergence and level playing field. And I have a few questions here, but I'll start with one of the themes we're hearing across the industry, including us, of course, is the importance of consistent implementation. How is the Commission, ESMA, or the NCAs thinking about this?
Well, consistency is extremely important because we have a single market and we want people to be treated the same and the rules to be the same across the EU. That's the importance. So we started by having MiCA as a regulation, meaning it's directly applicable. It does not need to be transposed into national law. It's not a directive, it's a regulation. So that already means that the rules are going to be the same everywhere. But what you can't harmonize is supervisory attitude. Some supervisors are more pro-innovation than others. You can try to converge them and they work together within ESMA and the European Bank Authority to converge, but attitude is something which is more psychological. If you want to have a single supervisory attitude, you have to move it to a single authority, and that's why the European Commission proposes to move supervision of crypto asset service providers to ESMA here in Paris, because then you'll have everyone will be facing a supervisor with the same attitude, because there's only one supervisor. Whether that attitude is going to be pro-crypto or more, I would say, skeptical remains to be seen, although I've got good hopes also with the proposals which we've made for the change to the governance and to the mandate of ESMA, that that attitude would be, I wouldn't say pro-crypto, it would be pro-innovation. And that's important because it's not about crypto, it's about innovation. That's what we're after.
Yes, and we've spoken about this a number of times now over the last 24 hours. Tell me, when you think about innovation, is tokenization the most attractive topic when you think about financial industry innovation?
Absolutely. I have been at the European Commission 30 years. I've done many areas, but most of my life I've worked on issues related to market infrastructure. And it's highly technical, very complex. Many financial institutions make an awful lot of money out of exploiting inefficiencies in the system, friction points. And tokenization and blockchain gives us really an opportunity to do away with these friction points. That's going to mean that some companies are going to lose their source of revenue because these friction points that they're currently exploiting, will no longer be there. But I very firmly believe, because of my interest in blockchain and technology, that, and this has been endorsed by my boss, the commissioner, that distributed ledger technology, blockchains, and tokenization will become the new operating system of financial markets. I have no doubt that I will live to see the future where financial markets are tokenized and operate on distributed ledger technology. I will live that day. I may even be not yet retired when it happens.
Well, I hope it happens sooner than later, because it is very exciting. Can you imagine people in Europe who do have access to brokerage accounts and can access American equities, European equities, so on and so forth. But can you imagine what happens to the rest of the world, the 8 billion people, or say close to 1 billion investors out there in the world, when they can access European and American equities markets, and they're not time zone prohibited, they're not cost prohibited, they can do fractional trading, they can do 24/7 trading. That's incredible, because you look at the US equities market, it's about $70 trillion, depending on the trading day. And 18% of those are foreign-based investors. Well, what happens to the US equities market and its value when you can attract more foreign-based investors into it? Does it go to 100 trillion? What happens to the European equities market? I'm curious how you think about the value creation when tokenization actually becomes a reality.
Well, I think we can only start beginning to imagine what may happen. We can't really predict the new dynamics that will emerge. We may have some idea. I think it'll be an enormous opportunity. Financial markets depend on liquidity. Everyone wants liquidity, and liquidity begets liquidity. If you do not have deep and liquid markets, your markets do not function. By growing your investor base, you increase liquidity. That's also what the European Savings and Investment Union is about, or the Capital Markets Union. It really is by integrating markets so that there's more liquidity in them and that they can serve the needs of industry and the economy for financing better. Now, it's extremely hard to integrate markets just through law. You can adopt laws and says, thou shall be integrated, but that doesn't mean anything. It's extremely hard to integrate markets based on legacy infrastructure and technology because these are all separate entities that are scotch-taped together and that spend time reconciling accounts with each other. To integrate markets, you have to move them onto shared ledgers, onto distributed ledgers. And that's how the integration will work. And that will bring massive amounts of investors and liquidity on the market and on chain.
Well, can I say, I think we've all in the digital asset economy seen that. I live in the United States on East Coast hours. On a Sunday at 8 p.m. Eastern Time, our order book on OKX is quite active. It's about as active as 9 a.m. in the equities market in New York. And can you imagine, well, one thing is, I think crypto's already done that, the unification of order books and being able to access markets in different areas. So I really believe we're at a very special point in our industry, which is we have finally got a very real use case that is applicable to everyone. Not just a small group of people, not just 100 million people, but everyone who's looking to access markets. And I think we've battle tested this technology, and it creates incredible opportunities for us to converge with traditional finance and lend them our technology so this tokenization concept can become real. Do you agree that crypto companies have a really important role to play in accelerating this concept of tokenization?
Yes, I do. And I'm so happy that you say this because many of my colleagues and my peers in the regulatory community still say, oh, we're experimenting with distributed ledger technology. We're trying things out. I tell them, the time of experimentation is over. This show is going on the road. It's going on the road fast. And the crypto or the digital assets community has a lot to learn from traditional finance in the way how markets behave and operate. But the traditional finance people have a lot to learn from how digital asset people operate, how they work, how 24/7 markets work, how integrated markets where you have the trading and the clearing and the settlement all in one, where there's custody at the trading venue, all of these kind of things. These are issues which traditional market players are not familiar with because it's all separate functions in the system. You integrate this, and so I think that both sides have to learn an awful lot from each other. Quite a few crypto firms, to call them that way, digital assets firms, probably need more maturing and more time to sort of say, well, what if you go through a down cycle? They have some experience with crypto summers and crypto winters, but a real crisis is important, and the lessons learned, and TradFi has many lessons learned, some at a huge cost, but they've learned them and they've adapted to it. And I think the crypto community will have to take those lessons on board and work with traditional finance to integrate those lessons. But traditional finance has to learn the lesson of what does it mean to be open, have direct access for consumers. Most equity trading venues have no experience with direct retail access. They have participants on it. FX markets have direct participants, but for the rest, it's a very intermediated access system. So it's a very different dynamic. So I think both sides have a lot to learn from each other.
Very good. Well, I got a question that I think is on the mind of many people in our audience, which is, we hear whispers of MiCA 2.0. Is that phrase even a real thing inside ESMA or the Commission or among the NCAs?
We are going to review MiCA, not because it's broken, but because it's important for us to evolve with how markets are developing. MiCA was designed for a crypto ecosystem where you had a few larger assets and then many other smaller assets, and the market is maturing. We see that. So we need to take stock as to, is it really working for the participants? And we'll start with a public consultation on this. Is it working? Is it delivering what you need it to deliver to build your business? And for us to progress, because one of the things which I often see in innovation, I do many innovation areas, is that as a policymaker, we like to develop, or we need to develop rules so that industry can build on top of those rules. If we do not keep our rules in check with the needs of the market will build around the rules. And that usually is a bad position to be in. It causes all kinds of legal uncertainty. It ends up being a problem, so we need to adapt it. So will there be a MiCA 2? I can't predict the future, but if I look at history, which is usually the best guide to the future, is that European legislation comes in iterations. We have MiFID 1, MiFID 2, Capital Requirements 1, Capital Requirements 2, Capital Requirements 3. So it would be rather unusual if there would not be a MiCA 2. So people are going to say the European Commission said that there is going to be a MiCA 2. I said, well, I think that history suggests that that's likely. We'll see whether what is likely is going to happen. Now people are going to sort of say, what's going to be in it? They're going to ask me, what are you going to put in it? We do not know yet. That's why we need to do this consultation and to engage with all of you. We will have no taboos. Any subject can be raised with us. And we are looking for evidence as to where we should go further, where we should change the rules, what needs policy and regulatory attention, and what does not. And that really is, the onus is on the industry to provide us with that feedback.
Well, that tees up my next question for you, Peter, which is you look at a number of companies through MiCA, through your work, you've been able to attract a number of large global venues to come into Europe and apply for MiCA and domicile here. The question becomes, you now see the marketplace. You look at a company like OKX, by the way, we started offshore, and in the last 3 years, I think we've gone more onshore than any other exchange. It really begs the question, what about the exchanges, the large venues that are still operating as offshore exchanges in EU or EEA? And what about the new venues that are coming up and providing really speculative trading instruments like perps and derivatives and what have you? How does the Commission, how does ESMA, how does the NCAs, what's their point of view on creating a level playing field so you don't end up discouraging the companies that have spent millions of dollars, hired Europeans, created jobs to come here, and then they see offshore exchanges, you know, quote, breaking the rules and operating the wild, wild west?
MiCA was designed to onshore European crypto activity in Europe. At the time, people said, oh, you are legitimizing crypto. I said, no, we're not doing any of that. We're not forcing anyone to trade crypto. But if you want to do crypto, if you want to trade crypto, we've created an environment that you can do this within the regulatory sunlight in Europe with many of the regulated crypto asset service providers that we have. Those that are operating outside of the regulatory framework or outside of Europe are not allowed to solicit business from Europe. They're not allowed to do that. If they do that, they can face enforcement action. But there is such a thing as reverse solicitation. If a European investor or consumer, on his own initiative, chooses to go offshore and trade there, there's not that much we can do about it, other than tell them, you're on your own. Don't come crying with us if this thing blows up.
But in the US, the Department of Justice or the Treasury Department or CFTC, any of these agencies have historically had enforcements against offshore exchanges. Would we see a similar pattern in Europe? Or would the European Commission or ESMA or the NCAs just let this sort of market exist?
it's not that we let it exist, but we do not have a tradition in Europe of what we call extraterritorial enforcement. Some member states do it a little bit because the enforcement is mainly done by member state authorities. But European authorities tend to do the enforcement focused on European territories. So they have no habit of enforcing internationally, which is extremely hard because if a company has no assets or no presence in your jurisdiction, it's extremely hard to actually go after them unless you are a major jurisdiction and you have ways to cajole your regulatory partners abroad to cooperate with you, or these executives of these companies, for some reason, need to be in the United States and then end up in an orange jumpsuit because they should have been more careful.
But is it easy to say that ESMA would not maybe reward as a is overextending ourselves, but would look at companies that have done the hard work, and they would look at them much more favorably long term than the ones that continue to maintain offshore operations?
Definitely. One of the things which we see is that when a supervisor gives a license to a company, they start treating them as one of theirs. And in the European context, they sort of then start speaking and defending them. Because but they only defend them if these people comply with their rules. They say, look, we will look after you. You've come to us. We will speak for you and defend you. And we will also defend you against. And if we have an opportunity to exclude people who do not want to comply with the rules, we will do that. And I will not mention the name, but I'll describe it in the stablecoin field. There is a very large stablecoin issuer that, by its own choice, did not want to get licensed in the EU. They prefer to stay offshore. I understand why they do that, although I don't think it's a good reason. But the result of that was that we were forced to require all the European trading venues to delist this token. So this token was effectively excluded from the European market. What was the consequence? That people moved into a regulated stablecoin, or some European investors who really wanted to have that unregulated stablecoin went offshore. That's a consequence. We lost part of the business because we had to live by the consequences of excluding someone.
But in that context, I would see the EEA then taking offshore exchanges off the App Store. But anywho, I will close the session now because we're running over time. And thank you, Peter. If MiCA was about bringing crypto into regulation, the next phase is about getting the balance right, as you said so well, between protection, innovation, and competitiveness. That's a conversation I guess we're all now a part of. And thanks to your great work with MiCA and architecting that framework faster than even the United States. Thank you very much for spending the time today.
Thank you.
Welcome to Signal Week.